Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the Portfolio Manager of Fundstrat's U.S. Large Cap Granny Shots ETF. I want to start this video with talking about macro. It's been a short week with Memorial Day, but through May 29th, the S&P 500 is up 1.6% and the NASDAQ 100 is up 2%. Pullbacks continue to be shallow, and it's our view that they'll remain shallow because this is still the most hated stock rally. Now, what do I mean by the most hated stock rally? Well, I mean, it's been a V-shaped recovery, and investors really have been skeptical during that entire rise. I think it comes down to a sizable perception gap that, in our view, the tariff war and concerns have a bark worse than the bite. Let me explain. For instance, on this week, yesterday on May 28th, the International Trade Court ruled against the Trump tariffs. Now, it didn't remove all of them, but it ruled against them. And on Thursday, May 29th, the DC District Court Judge Contreras ruled that tariffs are illegal. So it's two cases ruling against White House tariffs. But on the same day, the Federal Court of Appeals issued an administrative stay, which reinstates the tariffs at least through June 9th. But you can see this is getting quite complicated. And the White House is insisting nothing has changed after the tariff rulings. And in fact, Goldman Sachs highlights that there's many measures the White House can take to implement or re-implement tariffs. But ultimately, the White House is losing leverage, and it's taking us closer to the end game because it's going to be difficult for the White House to re-escalate things when they're losing really court cases. And so I think what we're probably expecting is the White House to look for an off-ramp. Now, this is not a surprise because tariff threats have led to concessions, just like the DOGE cuts, even though they're less than expected, have led to concessions. And even this budget and reconciliation bill, they don't have the cuts people are expecting in spending, but they have concessions. Now, hedge funds have increased their short interest recently, and that's contrary to what you expect, because when the market's rallying, you think hedge funds should be covering their shorts, but that's not the case. How short interest is increasing for the average stock. And there's still $7 trillion of cash on the sidelines. But maybe most importantly, and I've said this before, the investment outlook is better for stocks now, arguably, than it was in February 2025, because you've got tariff visibility, you have tax and deregulation visibility. The companies survived the fifth major stress test, which I've covered before, which argues multiples should be going up. And the Fed is arguably more dovish next year. Now, President Trump and Fed Chair Powell had a meeting today, but no surprise, it's not as if the central bank has changed their minds, and they're saying that they're going to support maximum employment and stable prices and will make the decision solely based on objective, non-political analysis. Well, in my opinion, that means that it's going to be easier to make the case for cuts in 2026. Well, that's a dovish Fed next year, which is really, as you think about it, 6 months from now, that should be positive for stocks. Now, turning back to Granny, ticker GRNY, this is the update for Granny Shots as of May 23rd. First, let me cover some particulars. As of May 23rd, the price of the ETF was $20.50, net asset value of $20.48, and total assets of $1.87 billion. Over the past week, Granny Shots fell 2.71%, while the S&P fell 2.58%, or relative underperformance of 12 basis points. Year-to-date, Granny Shots is outperforming by 351 basis points, and since April is outperforming the S&P by 872 basis points. This is the return of the 40 constituents. And as you can see here, Granny slightly underperformed the S&P Total Return Index. The top 5 contributors to positive performance are listed here: GE Vernova, CrowdStrike, Robinhood, Google, and Monster Beverage. And the bottom 5 performers are here. But of these 5 bottom performers, the one that was the biggest drag was FICO, which fell 23% for the week. Now, FICO is a recent add to the granny shots, and FICO is the company that gives you a credit score. Well, sometimes Washington picks winners and losers, and we can't help but really be subject to how that buffets stocks. For instance, one of the White House cabinet members talked about how they're disappointed about the cost increases by FICO, and that some credit reports have become more expensive under Biden's term than they were under Trump. And in fact, Bill Pulte from the FHFA is even proposing some changes that will negatively affect FICO. Now, I don't know if he has a personal issue with FICO or just has personal issue with rating agencies or with costs, but these are going to be buffeting FICO. And even though FICO has argued that these might have de minimis effects, the fact of the matter is, as Tom Block, who's the policy strategist for Fundstrat, likes to say, when you are explaining, you are losing. So it's really an uphill battle for FICO at the moment. And we can see it in the stock price. This is the 6-month price chart for FICO, and we're using some DeMark indicators here. Now, do you notice these 13s here? These are for 2 different counts of DeMark, but a 13 is called a sell setup. And after that sell setup was established, you can see FICO fell 33%, had basically a waterfall decline. Now, after falling 33%, you can see a series of green numbers here, which is currently at 7. That's because it has consecutive closes that are lower than it was 4 days ago. Now, this may get to 8 Friday, and it might get to 9 next week. And when it does, it creates what's known as a possible buy setup on DeMark. But there's no guarantees that's going to happen. And it's coming at a time when FICO is oversold. So it could be something that could lead to a stabilization of the stock price. I'm not sure at the moment. But at the moment, we'd say the best takeaway we have is just give it a week or two. In terms of themes, the best performing theme over the past week was energy and cybersecurity, led by GE Vernova. The second best performing theme is the PMI recovery theme. Again, the biggest contributor there is GE Vernova. Easing financial conditions is the third best performing theme, and that's led by Google and GE. That's it for now. Thanks for listening, and I'll speak to you soon. Don't